War escalates as the Strait of Hormuz closes, triggering a massive market sell-off today. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The Dow Jones Industrial Average dropped roughly 445 points to 45,577. The S&P 500 shed 1.5% to 6,506, and the Nasdaq Composite tumbled 2% to 21,648. The Magnificent Seven took a severe beating today. Nvidia and Tesla each plunged over 3%. Alphabet, Meta, and Microsoft slid 2%, with Amazon dropping almost 2% and Apple slipping 0.5%. Energy was the lone winning sector today, surging over 1%, while materials, consumer discretionary, consumer staples, and technology absorbed the heaviest losses. West Texas Intermediate crude oil jumped over 2% to roughly $98 a barrel. Bitcoin held near $70,000. Spot gold suffered a brutal liquidity squeeze, plunging over 3% to $4,500 an ounce, and silver crashed almost 5% to $68. The worsening conflict between the United States, Israel, and Iran sent shockwaves across trading floors. With the Strait of Hormuz completely blocked, fears of a global energy crisis sent oil soaring, directly fueling today's broad equity sell-off and the lone rally in the energy sector. Micron Technology delivered a massive earnings beat but issued aggressive capital expenditure guidance. This raised fears of profit margin compression and sparked a severe sell-off across the semiconductor space, heavily dragging down the Nasdaq and Nvidia. Supermicro Computer shares collapsed 26% after the government charged its co-founder with smuggling restricted artificial intelligence chips to China. This scandal unsettled the tech hardware ecosystem, adding tremendous downward pressure to the broader technology sector. The 10-year Treasury yield climbed to 4.38%, while the yield curve flattened to a spread of 31 basis points. The US dollar index strengthened to 99.3, and the VIX spiked 11% to 27. This combination of rising yields and high volatility signals investors are dumping risk assets for cash safety amidst stagflation fears. The CNN Fear and Greed Index sank to 17, plunging the market deep into extreme fear territory and indicating widespread panic and pessimism among traders. The market outlook remains heavily defensive. Investors are bracing for potential stagflation as energy costs soar and the Federal Reserve signals that rate cuts are completely off the table for the rest of the year. For your watch list next week, carefully monitor S&P Global Flash PMI data on Tuesday. On Wednesday, watch for the Durable Goods Orders Report, followed by the final fourth quarter GDP estimate on Friday. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.